Ladies and gentlemen, good day and welcome to the GPT Healthcare Limited Q3 FY24 earnings conference call hosted by JM Financial. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amey Chalke from JM Financial. Thank you and over to you, sir.
Good morning, everyone, and welcome to the Q3 FY24 result conference call of GPT Healthcare Limited. Joining us today on the call are Mr. Anurag Tantia, Whole-Time Director, Atul Tantia, Group CFO, Ms. Kriti Tantia, CFO, GPT Healthcare. I would like to now hand over the call to the management for their opening remarks. Thank you and over to you, sir.
Thank you. Good morning, everyone, and a warm welcome to GPT Healthcare Limited for the third quarter and 9-month ended December 31st, 2023 earnings conference call. I would like to thank JM Financial for hosting this call. Today, we also have on the call our investor relations team, Stellar IR, who will be helping us out. It is a great pleasure and gratitude that we come before you today to share our first financial results since the listing of equity shares on the esteemed stock exchanges on February 29, 2024. I want to extend my heartfelt thanks to our BRLM, legal counsels, RTA, stock exchanges, and each and every one of the 127,000 shareholders who placed their trust in us, contributing to the success of our listing, which saw a good subscription from all segments. The IPO was 525.1 crore, including a fresh issue of 40 crores, and with this, the private equity investors, Banyan Tree, has fully exited the company. GPT Healthcare Limited, the healthcare arm of GPT Group, owns and operates 561 beds spread across 4 state-of-the-art tertiary care hospitals in the eastern part of our country under the brand name ILS Hospitals. Founded in the year 2000 in Salt Lake, ILS Hospitals has since expanded its footprint and capabilities to Agartala, Dum Dum and Howrah as well. Presently, we have a network of 4 hospitals. The first one is the 85-bed facility in Salt Lake, a 205-bed facility in Agartala, 155-bed facility in Dum Dum, and 116 beds in Howrah, all equipped to provide neighborhood tertiary care facilities to the patients in these micro markets. Now, let me take you through each of these 4 hospitals. The Salt Lake Hospital is primarily a 85-bed surgical excellence hospital located in the residential part of Kolkata called Salt Lake. It has historically had good occupancies and return ratios. The 9-month current occupancy for this hospital is 62% due to the introduction of robotic surgery, which has reduced the average length of stay drastically from 4 to the current levels of 3.2. We have an ARPOB of approximately 33,600 with EBITDA margin in excess of 25%. The 9-month revenue for this hospital was 49 crores, with last year revenues being 63.7 crores. The Agartala Hospital, which is the next hospital we're talking about, is the only corporate hospital in the entire state of Tripura. With 205 beds, it has 66 critical care beds. Here also the margins have been north of 25% at 26.1%. With an ARPOB of approximately 28,000 and revenues this year expected to be approximately 115 crores, with 87.6 crores already achieved in the 9 months. The next hospital is the Dum Dum Hospital, which is 155 beds and boasts of the highest occupancy rate amongst our facilities. The occupancy rate stands at an impressive 78%. It recorded an ARPOB of almost 37,700 for the 9 months ended December 23. Dum Dum's length of stay was higher at 5.2 on account of the specialized renal transplant program we run at this hospital. This hospital started in 2013 and is our model hospital going forward. Here, we did an EBITDA break even in 10 months, which is one of the fastest for a tertiary care setup in our industry. Our latest hospital is the hospital at Howrah, which is a 116-bed tertiary care hospital, which was started in the year October 2019. It currently has an occupancy of around 45%, an ARPOB of 26,700, and an ALOS of 3.8 days. Here, we could achieve an EBITDA break-even in just 8 months, bettering our track record of Dum Dum. It is located in North Howrah, one of the most densely populated parts of Howrah, with the closest hospital being almost 5 kilometers away, which translates to almost 45 minutes. As we delve into the numbers, I'm proud to report that our focus on robust operational and financial parameters has translated into commendable performance for the quarter and 9 months ending December 31, 2023. Our existing hospitals continue to demonstrate strong performance across various metrics. Notably, our ARPOB stands at 32,500, aligning with our commitment to serving the aspiring population of the society with higher disposable income in the middle to high income segment. Moreover, due to our neighborhood hospital model, almost 91% of our patient business is from cash and insurance, which has enabled us to achieve cash flow from operations to EBITDA ratios of approximately 80%, one of the highest in the industry. Our revenues for Q3 FY24 was 96.6 crores, marking a growth of 3.9% on a YOY basis, compared to 92.9 crores last year. For the 9-month ended period, revenues totaled 300.7 crores, representing a 13.5 YOY increase from 264.9 crores last year. We expect to close the year with a revenue in excess of 400 crores and expect to grow at 15 to 18% in FY25. Our EBITDA for the quarter stood at 22.2 crores compared to 21.2 crores for representing a growth of 4.6% YOY. And EBITDA for the 9-month period ended, 9-month ended was 68.4 crores compared to 54.1 crores last year, which is a growth of 26.3%. The EBITDA margin stands at a healthy 22.7%, and we are confident of maintaining this in the 23 to 24% range. The new hospital in Howrah and the Agartala hospital are on the path for improvement, and which will lead the overall network to increase in terms of occupancy. The profit after tax for the quarter stood at 11.5 crores, marking a tremendous growth of 37.4% YOY compared to 8.3 crores last year. Similarly, the PAT for the 9-month period ended has shown a comparable growth of approximately 37.9% YOY from 25.3 crores to 34.9 crores this year. With decrease in financial cost on account of repayment of debt from the IPO proceeds and operating leverage, the PAT will continue to grow disproportionately going forward. The gross debt now stands at 8 crores, with cash and investments at 45 crores to fund our expansion programs. The network level bed occupancy rate currently stands at around 60%. This will inch up to around 65 to 70% in the coming quarters from the existing hospitals. In terms of patient volumes, the inpatient and outpatient volumes stood at 23,100 and 121,000 respectively for the 9-month period. The ARPOB has also increased to 32,500, whereas the ALOS has decreased to 3.98. We aim to achieve long-term ROCE and ROE in excess of 25%, with a capex per bed of about 7 to 8 million, which is the lowest in the industry. At GPT Healthcare, our geographical focus is on Eastern India, a region with significant unmet healthcare needs, positions us as a beacon of excellence. The eastern part of the country has only 14 beds per 10,000 population, compared to Pan-India having almost 40 beds per 10,000. Our unwavering dedication to patient care, professional integrity, and medical excellence remains steadfast as we continue to grow. In line with commitment to expanding access to quality healthcare, the company is pleased to announce the extension of our services to patients in Raipur in Q4 FY25. The 152-bedded hospital is being made on an asset-light basis, with land and building on lease. The company shall invest 55 crores in the hospital, which shall be funded through internal accruals and a small debt for long-term equipments. Apart from Raipur, we are looking at commissioning a new hospital in Ranchi in FY27 and other prospective hospitals in Tier 2 cities of Eastern India, in states like Uttar Pradesh, Jharkhand, Assam, and Odisha. Through strategic expansion and provision for advanced medical services, we not only strive to meet the evolving healthcare needs of these communities, but also contribute to their overall development and well-being. We aim to establish a chain of 150 to 200 bed hospitals in these burgeoning markets, thereby fulfilling the pressing need for modern healthcare facilities in these areas. Lastly, the company has declared a second interim dividend of rupee 1 per share. The record date for the same has been fixed on 2nd April 2024, maintaining a dividend policy for rewarding shareholders. The total dividend declared for this FY is rupees 2 per share. With this, I conclude my opening remarks and look forward to addressing any questions you might have regarding our financial performance and future prospects. I will request the moderator to kindly open the floor to questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Chintan Shah from JM Financial. Please go ahead.
Hi, sir. Thank you so much for the opportunity. So I have approximately 2-3 questions. So first question is, if we look at the actual numbers that we had reported, so over there we had seen a growth of around 19% in revenue terms, and at EBITDA level, growth was around 40% plus. Now, if we look at the Q3 results, the growth both at the revenue and EBITDA level is approximately 4%. So what I wanted to understand, so what has led to this kind of growth in this quarter versus the first half?
Hi, Chintan. Thank you for your question. So, primarily the reason for the lower growth in quarter 3 in terms of revenue and EBITDA has been on account of the festival shift during quarter 3. Last year, if you see, the Durga Puja and Navratri was towards the beginning of end of September, so it affected the quarter 2 performance. Well, this year it is towards the end of October. So this has a major impact in the region where we operate, especially West Bengal, where it is considered to be one of the biggest festivals of the year. Quarter 3 is also a seasonally weak quarter every year, and we expect the performance to ramp up in quarter 4 considerably.
Okay, so to supplement this, if you can clarify how was the occupancy and ARPOB for quarter on the YY basis for Q3 FY24 versus Q3 FY23?
So in terms of patient volumes, we have done a similar amount in terms of Q3 FY23 and Q3 FY24. Occupancy also has been kind of similar. It's been kind of flattish in terms of growth.
Okay, so the entire growth was driven by increase in ARPOB basically, so to say.
Correct.
Okay. The second question is, going ahead, say FY25, how should we, since our next hospital will be coming in, say by end of FY25, so next year, how should we understand the growth in terms of occupancy and ARPOB, especially in a scenario where there are regulatory concerns as well?
So, looking at the FY25 numbers, we expect our top line to grow at around 15 to 18% range. This will include a portion of revenues being contributed from the new hospital. In terms of the regulatory change which we are foreseeing, A, it is under discussion with the industry bodies and the government mechanism. It is something which is to be seen how it evolves. And B, I think because of our focus on the middle income segment and our considerably lower ARPOB, we are in a better position to adjust if and when it does come along.
Okay, got it. So is it fair to say if we had to look at the growth next year, around majority of would be occupancy and some bit from ARPOB, 3-4% from ARPOB?
Correct.
Okay, got it. And just last question from my side. So in terms of branch commissioning, if I remember correctly, April, of IPO, it was planned to be commissioned in FY26. Now, in your opening remarks, I think if I read it correctly, it's now being planned to be commissioned in FY27. So is there some change, delay in the timeline, or?
No, we had mentioned calendar year 26, which would be FY27.
Okay. Okay. Got it. Understood. I think that's it from my side. Thank you so much.
Thank you.
Thank you. A reminder to all participants, ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Dishant Jain from Quasar Capital. Please go ahead.
Yeah, thank you for giving me the opportunity, sir. My first question is on the ARPOB. So by going into FY25 and FY26, so how are we thinking about increasing it? Like, will it be mostly related to the inflation at the state, or are we thinking of, bringing new treatments, technology, mix, which will improve our ARPOB and kind of sustainable for the future as well?
Thank you for your question. So in terms of going forward, the ARPOB increase will be a combination of inflationary increase to the tune of around 3 or 4%, and the balance coming in from a change in specialty mix. Every hospital has a different strategy in terms of what change we are envisioning for a specialty mix, which will further increase the ARPOB. Overall, we expect the ARPOB levels to be growing at around the 7-8% mark.
Okay. And so my second question would be on the doctor's part.
Mr. Jain, may I request you to use your handset, sir? Your audio is breaking.
Is it audible now?
Hello?
Is it better?
Yes, sir. Please go ahead.
Yeah. So my second question would be on the new hospital that is coming at Raipur by next year. So, do we already have the connects with the doctors over there? Because those will be the biggest driver for our volumes as well. So how are we planning to get the doctors from the competition? Because competition would be already present there. So would it be difficult for us to get the doctors at the initial phase?
Sure. So the doctor engagement process at Raipur is already on. Our teams are already working with different doctors. We would be working with a mix of local doctors and some doctors of that area who are residing in other cities. We would be looking at repatriating them. So it is a complex strategy which is already in place, and we are hopeful of getting good quality doctors in time for the starting of the hospital. This hospital will be a modern facility located in one of the most densely populated areas, and we are very confident that our model allows us to attract good quality doctors, and we are on track for doing that.
Okay, sir. And sir, is it possible to quantify how much lease rentals are we going to pay for that hospital, and any future expansion is possible on the same hospital?
We would be paying around 3 to 4 crores a year of lease rental. There is no extra space in that facility to expand after that.
Okay. And sir, just the last one. So are we going ahead with the same kind of surgeries? Like we are, majorly focused into diabetes, nephrology, laparoscopy. So are we going to start with the same kind of mix at Raipur as well, or are we looking for a new kind of specialty surgeries or treatment?
We are a tertiary care hospital group. We do all kinds of surgeries and treatment processes, right from cardiac surgeries to neurosurgeries, including renal transplants. So we cater to all segments of the medical treatment facilities available, including oncosurgeries. We are looking at expanding to Raipur with all our facilities intact.
Okay, sir. Yeah, those are my questions. Thank you for answering all the questions. Thank you.
Thank you. Our next question is from the line of Sunil Jain from Nirmal Bang Securities Private Limited. Please go ahead.
Yeah, thanks for taking my questions. Sir, my question relates to more of an Agartala hospital. So if I see their ARPOB in the 9 months is around 28,871, whereas for 6 months it was 30,206. So there was a sharp corrections in Q3. So any specific reason for that and how it is likely to move in Q4?
So there was... Hello, am I audible?
Yes.
Yeah. So yes, there was a correction in FY23 to 30,488, and it is around that same range in the 29,000 mark for 9 months ended FY24. This is on account of the case mix which we are catering to. Last year, we saw an increase in terms of the surgical volume post-COVID, which is now streamlined and stabilized. So that is what is leading to the slight dip in the of 1,000 in the ARPOB. But we are hopeful we will be maintaining similar levels with the growth trajectory going forward.
My question was more related to first half and third quarter. So first half, it was around 30,000 plus, and in 9 months, it has come down to 28,870. So quite possible in third quarter, it might have come down to even around 26,000 or something. So that was a very sharp correction.
No, it did not come down to 26,000 levels. It was at around the 27, 28,000, which is a factor of the seasonal mix. In quarter 3, a lot of surgeries tend to get delayed and pushed out to quarter 4 because of the Durga Puja festivities in this region, which is a factor of that.
So the yearly ARPOB can be maintained, what was there in the last year, or it will be lower than that?
The yearly ARPOB should be around the 30,000 mark.
Okay, great, sir. And the occupancy in Agartala, how you expect it to move? Because that is a very good performing hospital. So how it is currently and how you expect it to move in FY25?
So for the 9 months ended, the occupancy at Agartala has been 53%. We are envisioning this hospital occupancy to go up to the 70% mark in the next 2 years, and we are on track for doing the same. Even as we speak, the occupancy of the hospital is at 60%. So there is considerable ramp up in the productivity and occupancy of that hospital, and we are confident it will be reaching a target in the next 2 years.
Great, sir. And similarly for Howrah, where the occupancy improvement scope is substantial. So how is that likely to move in FY25, and what is it in current quarter?
So 9 months ended, the occupancy is around 45%. As we speak, the occupancy is 50%. In this hospital too, we are seeing good traction with our productivity, and we are hopeful that we should be reaching around 70% occupancy in the next 2 years.
Great, sir. And last question about Raipur. What is the break-even level of capacity utilization, since there will be a rent component also in this?
So we are mindful of the rent component and of the fact that we are moving to a newer geography. We expect our break-even to be around the 12 to 15 month mark, where we expect occupancy levels to be at around 35 to 40% range.
Okay. So initially we may be incurring losses and thereafter turning it around.
That is the trajectory every new hospital faces. And yes, we expect similar productivity from the Raipur hospital as well.
Okay. Thank you very much. Thank you for answering my questions.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Raj from Arjav Partners. Please go ahead.
Hello, am I audible?
Yes, sir. Please go ahead.
Hello. Hi. Wanted to ask on the number of employees. So how many doctors are on full-time payroll and how many doctors are on consultant basis?
So, in terms of the number of employees, we have almost 1,850 employees. The doctors for us are consultants. They are not employees. We have the presence of almost 100 full-time consultants and the association of almost 500 visiting consultants.
All right. And how much is the sale from London Hospital and Howrah Hospital?
I'm sorry, your question broke. Can you repeat your question, please?
Yes. How much is the 9-month FY24 sales for Dum Hospital and Howrah Hospital?
So the 9-month sales from the Dum Hospital was 125 crores, and the 9-month revenue from the Howrah Hospital was 38.4 crores.
All right. And how much is the occupancy currently at Agartala?
Agartala 9-month ending occupancy was 53%. Right now we are tracking at almost 60%.
All right. Okay. Thank you.
Thank you. Our next question is from the line of Sagar Doshi from Fintuit. Please go ahead.
Yeah. So basically, after Raipur, next hospital is coming up in FY27. So any other expansion plans in between, let's say, capacity addition in the current hospitals and things of that sort, and any inorganic expansion if you would be doing? That's the first thing.
So, yes, in terms of planned expansion, we have Raipur coming up in FY25 and Ranchi in FY27. We are on the lookout for inorganic opportunities in Eastern India. In fact, we are evaluating opportunities in cities like Jamshedpur, Guwahati on an inorganic basis, which we are hopeful of clicking and commissioning by FY26.
Okay. And coming to the profitability, so let's say the guidance for revenue growth is around 15 to 18%, and in initial you said that profitability could grow.
Your audio is not clear, sir. Maybe request you to use your handset, please.
Is it better?
Yes.
Yes, sir. Please go ahead.
Okay. So the second question would be on the terms of profitability. So you said the revenue guidance of 15-18%, but profitability could grow disproportionately. So anything from mid-year, 2-3 year period, what is the range that we could expect? Keeping the EBITDA margins if you guided for 23-24%, that also is almost similar range. So what is the profitability jump that we could expect in next 2 or 3 years due to operating leverage, or what could be the levers for it?
We expect the profitability to grow at almost 25% at a CAGR level for the next 2 years.
Okay.
This would also have an impact of the decrease in finance costs on account of the repayment of debt.
Okay. So if I suppose model out 25%.
I'm sorry, I cannot hear you.
I'm saying the whatever FY24 we are able to register on that for FY25 around 20% is something that we can look. Correct.
Yes.
Okay, got it. Thank you.
Thank you. Our next question is from the line of Sanchit Chawla from Shubhkam Ventures. Please go ahead.
Hi, sir. Am I audible?
Yes.
Yes, sir. Please go ahead.
Yeah. So my first question was actually on your occupancy in Salt Lake Hospital. I understand that there is robotic surgeries happening and therefore that dip in the occupancy in Salt Lake. But, I still feel that, it's one of the oldest hospitals in your network, and this is something where you can easily go to 80-85% kind of occupancy. So just want to understand, when you would be at that kind of occupancy for this hospital?
Sure. So 80-85% occupancy for a hospital is something which is very, very difficult to maintain. It leads to a lot of operational problems. We consider an occupancy of around 75 to 78% as optimal. Beyond that, pushing the hospital becomes very difficult. In terms of Salt Lake Hospital, yes, you've correctly pointed out, our length of stay has reduced on account of robotic surgeries, which has primarily led to the reduction in occupancy. This opens up more avenues for us to take additional patients. It is something which we are working on with the increased bed availability now. We are hopeful that we'll be able to push the hospital back to the 75% occupancy mark in the next year itself. We have put in place various strategies to that effect, including giving a good push on the gastro program, where we are going to start DNB in that department as well.
Okay. And my second question was on your margins for Agartala. They seem to be higher than Salt Lake despite lower occupancies and lower share of robotic surgeries. So why is that?
So that is on account of the sizing of the hospital. We do get a certain amount of operating leverage. There are a larger number of full-time consultants also in that hospital. So there are various metrics which end up giving us that extra impetus in terms of EBITDA.
And you're also adding